Hello and welcome to the Opening the Gates November 2025 UK property market update. I'm going to get straight into it because there's a lot to cover this month, particularly after we had the budget on the 26th. So, without further ado, let's start sharing the screen. Okay, so to start with, we have got the usual. So from left to right, just need to get my zoom out of the way. There we go. So from left to right, we have got year on year, November 25 versus November 24. Middle column is month on month, November versus October 25. And on the right hand side, we've got November 25 versus the November 20 to 25 average. So on the market, i.e. properties for sale, up ever so slightly on last year at 0.82%, but down 8.5% on October. Makes complete sense of those figures there because of the uncertainty around the budget. I make no apologies for the amount of times I'm probably going to use the words uncertainty and budget in this recording, but they are still up almost 15.5% on the 5-year average. Stock levels do appear to have plateaued, though they're at their lowest point since about February this year. So we don't have an oversaturation of stock in the market, if that's even words or grammar that I've just used. So healthy levels of stock in the market, which is good. They're the highest level since November 20, I can't remember if it's 2012 or 2013. Pretty sure it's 2013. So a dozen year high. You'll see Rightmove and Zoopla report on the decade high stock levels as well. Onto new listings, not surprising here, 10.5% down year on year, 27% down month on month, and 7.5% down on the 2025 average. Again, all the uncertainty around the budget makes complete sense as to why people wouldn't want to be putting their house on the market. What we've got to also consider in some of these year on year comparisons as well is November last year, there was a bit of a mad rush to beat the stamp duty deadline. And you'll see that when I go through some transaction numbers shortly as well. So sales agreed down 7.35% year on year, 18% month on month, but only 3.72% down on the 20 to 25 average, which I think is a fantastic result considering everything that we've had going on this year. But the UK market is just so resilient. Again, not going to apologise probably for the amount of times I use the word resilient or stable in this recording. But with everything we've had thrown at us, particularly the fact that about a third of this year, so from the start of August through to the end of November, a really late autumn budget by all accounts, maybe the latest one ever, although don't quote me on that. A third of the year has been under a cloud of uncertainty. So to get a sales result that's only 3.72% down on last year, it's pretty damn good going. Price changes down 17% year on year, 37% month on month, and level with the 2025 average. So price reductions have dropped significantly. If you look at the withdrawal numbers as well, 39.5% down month on month, year on year, beg your pardon, just under 46% down year on year, and 28.5% down on the 2025 average. Fall throughs 11.72% down year on year, 16.38% down month on month, and 9.5% down on the 2025 average. Properties coming back to market, so sellers who've tried in the past, failed to sell and relisting, 41.34% down year on year, 6.66% down month on month, and almost 33% down on the 20 to 25 average. So the reason I've just reeled through all of that in one swoop is the fact that price changes, withdrawals, fall throughs, relisteds are all down suggests to me that sellers have gone, do you know what? Let's just sit on our hands and wait and see what happens. Fall throughs going down as well also suggests that buyers were not panicking and waiting to see what happened with the budget as well. So yeah, doesn't look like the budget has massively impacted the market. We haven't got people running for the hills. And I think there's a lot of pent-up demand, which we'll see come out in 2026. And I think there'll be a great start in 2026, but we'll come on to that a little bit more. Right, so on to asking prices. So average asking price of new listings slightly up year on year, down month on month. Not unsurprising for the time of year, although a little bit more than anticipated and the long-term average. Rightmove reports on that. Again, I'm going to run through that. Average pounds per square foot is at 399 compared to 364 a year ago, and slightly up on the 392 of a month. So from a pounds per square foot perspective, things are tracking upwards there. And then sales agreed, average asking price, really steady. So I know it sounds really obvious and patronizing, but if you price a property correctly on the correct price points and market it correctly, you are going to sell and sell at a good price. But you've got those who price clearly too high. Looking at the average pounds per square foot there, skyrocketing from a year ago and up month on month. If you do that, then you're just going to sit on the market and make these properties look better value for money and help them actually sell. Right, on to mortgage approvals. So I'm going to be looking at my other screen whilst I do this. So mortgage approval data. So if you're looking at the 12-month mortgage approvals, um, so 65,000 mortgage approvals in October, only slightly down on September, month on month. The 12-month average is 64,742. And last year, October approvals were at 68,000. So they're not a million miles away from where they have been all year, where they were last year, which shows that there's not been a massive drop off with the budget. So really, really positive news there. In terms of the 10-year for mortgage approvals as well, average 10-year October is just shy of 67,000. So 65,000 is pretty good going. And last year, as I said, it was 68,000. You can see a spike in October 2020. Obviously, it went a bit mad during the COVID period, coming out of one of the lockdowns, I guess, and stamp duty holidays, record low interest rates, etc., etc. Right, transaction numbers. So the financial year is at 630,000, which is down on the 652.5 from last year. And the average for 10 years of 671.5. So tracking slightly below averages, but again, pretty healthy considering we've got much higher interest rates than we have for most of that decade. And we've had lots of uncertainty for this year as well. Lots of that was like I said, a lower interest rate environment and much more positive results. So again, solid numbers. The 12-month figures. So in October, there were 98,450 transactions, which is just shy of the 12-month average of 99,000. It's actually the best result since March when the stamp duty deadline happened. So that's the spike you see in the graph. And it's actually the third best performing month this year, only behind February and March when people were rushing to try and complete before the stamp duty deadline. So it says to me that people were not put off with the upcoming budget in order to tax reform speculation. So almost 100,000 people wanted to move home in October, even though we had the budget looming over us the month after. So if we think about mortgage approval data and transaction data, we're averaging about 65,000 mortgage approvals. A third of the market tends to be cash or cash from sale. Therefore, that would dictate about 100,000 transactions a month, which is pretty much what we've averaged this year, which would put us on 1.2 million transactions, which is a perfectly normal market. If you look at the previous few decades and what the averages are for how many transactions there are a year, 1.2 million is pretty normal. When we had obviously the mini budget happened and interest rates spiked, things were dropping down closer to a million, but somewhere around 1.2 is pretty normal. So if you can set out your business model on 1.2 million transactions a year, so working out that there's about a 3 to 4% turnover rate each year, look at that in your area, how many chimney pots are there? That will give you an idea of size of market. If anyone wants this information on their area, please do give me a shout. Right, 10-year averages. So October, as I said, was 98.5. The average for October has been 96,000 and it was 100,000 last year. So again, really, really steady result for October on transaction levels, which is really, really positive to see. And the transaction levels are a little bit lagged. So obviously we're looking at October completions here at the start of December. But as I said a few minutes ago, if you look at the mortgage approval data, you can kind of predict what's going to happen to transaction levels 4 months down the line with how long properties are taking on average to go through. Inflation rate has dropped down to 3.6, so it peaked this year in August and September at 3.8%. Does look to be on its way down, fingers crossed. That means that we should see interest rates continue to come down ever so slightly. When you look at the average mortgage rates out there, the Moneyfacts average mortgage rate has dropped below 5%. I think at the time of recording, it's now at 4.91%, and that's the first time it's been below 5 since the mini budget. So some really, really positive news there. On inflation as well, that has meant that the markets have, I think, put in a 90% chance that the base rate will drop from 4 to 3.75% on the 18th of December. And it looks like the lenders have already voted on that as well, with their actions because they have been dropping their interest rates. So do expect a base rate drop to 3.75%. If you want more information on base rate predictions for 2026 and the years ahead and for interest rates, take a look at my LinkedIn newsletter that has just gone out. Um, but basically, there's not going to be much more happens with interest rates. Looks like they're going to kind of sit steady in the four sort of region as an average, and then there'll be some lower ones with a three in front of it, which is perfectly normal. In terms of affordability, just before I forget, when you look at there's some great data that's come out from Lloyd's recently, which again is in my LinkedIn newsletter. The average house price to earning ratio is at its best point in the past decade. And then when you look at percentage of take-home pay spent on a mortgage, it's about a third. Again, that has got to its best point, I think, in the past few years as well since the mini budget. So affordability is definitely improving. It's helped with the relaxing and stress testing as well. Wages have gone up, and then modest house price growth as well has certainly helped balance that out. There is still constraints to the market. There is challenges. So first-time buyers still need to get a deposit, but the bank of mum and dad and grandparents are helping with that. There's strong balance sheets, particularly people still saving money from COVID. And rent now, I think, is about £200 to £300 more a month than the average mortgage payment for a first time buyer. I think that's based on a 10% deposit and probably a 25, 30 year mortgage. So definitely lots of positivity in the market. So house price index update. So we have got an average monthly drop of 0.31%, and an annual gain of 0.5%. I think that's maybe only the second time since I started doing these major house price index updates, but the monthly has been a negative. And I've been doing these for over a year now. So it does show there was some hesitancy in the market in November. Again, not unsurprising with all the uncertainty out there. But even with all the uncertainty out there, the fact it's only gone down 0.31% as an average and is still up 0.5% on an annual basis, I think is very, very good going. Right, on to Rightmove. So Rightmove reported a 1.8% drop to the average asking price in their latest index, larger drop than usual for November. So the average new seller, it dropped by 6.5 grand to 364,833. And if I scroll down here, that compares to an average drop over the previous 10 years of 1.1%, and it's the largest fall in prices this time of year since 2012. They go on to say about the decade high number of homes for sale, putting downward pressure on prices, and then concerns over the budget as well. So already touched on it. But it looks like sellers are hopefully being a little bit more realistic. Estate agents are being more cautious, and that should hopefully result in more sales actually happening because people are being more realistic. However, average asking prices are only down by 0.5% on a year ago. And agreed sales in the year to date are up 4% versus the same period in 2024. So whilst we've had a third of the year, August through to the end of November, loads of uncertainty with the budget, the market is still outperforming year on year, which is bloody good going on that. So just run through a few more bits here from Rightmove. So sales agreed for 2 million plus homes, obviously subject of the mansion tax, were down 13% year on year. And then the uncertainty of what was going to happen in that 500,000 to 2 million range, excuse me, had impacted on what was going on there with an 8% drop year on year. The under £500,000 market, less so in terms of being impacted, only being 4% down on this year. And despite the downward trends across the month of October, and also comparing to a really strong month at this time last year because of the race to beat the stamp duty deadline, the fact that it's up 4% on year on last year is bloody good going. As I've already touched on, right, me say about the average 2 year fixed rate mortgage being at 4.41% compared to 5% last year. So dropped down ever so slightly. I think for someone coming off a 2 year fixed rate now, for every quarter of a million they borrow, they're probably 200 odd quid better off per month. However, those coming off a 5 year fix, obviously this time in 2020, interest rates were super low. Their mortgage per 250 grand borrowed is probably going to be a couple hundred quid more a month. So something to consider there as well when you're speaking to sellers about buying power and why they need to price correctly to entice the buyers with value for money. Um, right, the other thing I just wanted to touch on with Rightmove is this bit here. So 34% of all homes for sale on Rightmove right now have had at least one price reduction, the average size of reduction being 7%. Both those figures are the highest they've been since February 2024. So price reductions, whilst they were lower in November across the whole market, as I reported on a few minutes ago, price reductions are still at a record high. Again, if you want to find out more about the do's and don'ts around price alterations, please do give me a shout. Right, last couple of bits on here. So let's just run through this. So sales agreed in the price range between 5 and 2, down 8% year on year. A smaller drop than the 2 million sector, but a larger decline than the overall average this month of a 5% year on year fall in agreed sales. So homes priced under 500,000 account for 75% of the market, so three quarters of it. And as I said, they're only down 4% compared to this time last year, but year to date, they're still up 4%. So, yes, we had a bit of uncertainty and a drop according to Rightmove in the lead up to the budget. Makes complete sense. But things are still more positive than they were a year ago. And now that the budget is out of the way, that should continue momentum on into 2026. Just going to scroll down here to well, let's quickly look at this. So stock levels remain pretty steady. Time to secure a buyer is pretty steady. But the thing I wanted to show was affordability trends. So as you can see, rent is now tracking higher for best part of a couple of years based on mortgage payment and 10% deposit. And affordability to buy a first home or based on the average asking price for a first time buyer. If you look at the two people salary, about 2/3 of all mortgages are on two incomes. So it does show that people buying with two incomes, that's certainly improving house price to earning ratio. And then the bank of mum and dad and grandparents is obviously helping, and then slightly lower interest rates is helping. Rents keep skyrocketing. People are not wanting to line a landlord's pocket, so they're wanting to spend their money on their own mortgage rather than a landlord's. So all positive signs there for the market. Okay, Zoop house price index. Um, let's just zoom in on that. So buyer demand, new supply, and sales agreed all down in the lead up to the budget, just like Rightmove reported, and makes complete sense. Stock levels still slightly up on a year ago, as I've already reported. They've reported house price inflation, scroll back up to that, sorry, is at 1.3% annually, and not much of a movement month for month as well. So steady there, modest house price growth, which is not a bad thing for the market. Right, let's keep scrolling. House prices. Where's that? This is what I wanted to do. Right, okay. So the threat of the new annual property tax of those properties over 500,000 not coming into effect means that 210,000 homes for sale and 24% of the market is not going to be impacted. So that should mean that that mid to upper quartile should get some more activity again and return to levels that we're seeing for the sub 500 market. So real positive news there. Stamp duty is increasing the cost of moving. Again, if you want to find out more about that, jump into my LinkedIn newsletter. I've also done some further data on cost of moving versus a year ago, which I think is a big thing that impacts on people moving. And then let's just show you, where are we? Just trying to find the monthly price. It would help if I knew what I was doing. I wanted to highlight that the monthly price hasn't changed, but you can just take my word on that. So let's just read the outlook. So after a very long lead up to the budget, yeah, the bark was much worse than its bite for the housing market. So a lot of the unknowns impacted the market more so than the knowns from the budget. Zupa's data shows that the underlying demand to move home remains strong. I think their data is 2 in 5 people, so about 40% of the market, are either in the market to buy right now or observing the market. So it's our opportunity now to go out there and try and be the catalyst to entice people to move home. Variety of different strategies to do that. Again, get in touch with me on that. So, with greater certainty, Zupa expect a rebound in market activity, and that's going to build into the new year. Those households who pause their moves in the lead up to the budget over recent months should be expected to return with more confidence. And I'm just going to scroll back up here to this quote as well from Richard Donnell, who, by the way, fantastic speaker. Saw him speak at the Negotiator Conference last week. And he has appeared on my podcast before as well. He's definitely someone you want to follow online. So Richard said, with the budget uncertainty now lifted, buyers and sellers can return to making decisions about their next move. Removing the threat of a new annual property tax from the 210,000 homes for sale will certainly help revive market activity in the higher value areas. However, the lack of any stamp duty reform means home buyers will continue to face rising purchase costs. Um, Again, if people want to talk to me about that, get in touch. So, whilst interest rates are improving, and house price to earning ratios are improving, yes, there is still a barrier for people moving home, but there's definitely opportunity there. People want to move home, maybe they just need to adjust their budgets on that. So, yeah, get in touch if you want to find out more. Right. Nationwide. So Nationwide reported a monthly change of 0.3%, which was slightly up on a 0.2% reported the previous month. Whilst there's been a dip on annual price change from 2.4 to 1.8, it is pretty steady. So they've said that the slight softening, the housing markets have remained fairly stable over recent months. House prices rising at a modest pace. Notice the word modest in terms of house prices mentioned a few times. Mortgage approved for house purchase maintained similar levels prevailing before the pandemic. I've touched on that. So against a backdrop of subdued consumer confidence and signs of a weakening in the labour market, this performance indicates resilience. That's that word again, especially since mortgage rates have more than double the level they were before COVID struck and house prices are close to all-time highs. So I said about those coming off a 5-year fix in 2020, for every 200, 250 grand they want to borrow, looking at an extra 200 odd quid per month. The changes to property taxes announced in the budget, unlikely to have a significant impact on the market. The high value council tax charge will not be introduced until 2028. It will apply to less than 1% of properties in England based on the transaction data so far this year. So, great little bar chart that they're showing. Again, there's more data on the mansion tax in my LinkedIn newsletter. And as you can see with the nationwide house price index on the right hand side, prices are at a record high for them. So the increase in tax on income from properties may dampen supply of new rental properties coming on the market. Rental supply has been constrained for some time. It just hasn't grown. It's plateaued in terms of how many properties there are. You've got landlords exiting the market. It's around 15 to 20% as a UK average. Just under 10% of purchases are landlords re-entering the market. So there's kind of a plateau there. So low supply, really high demand as population grows, and that's just going to bring rental prices higher and higher. We've obviously got various different things going on with renters' rights bill, but it's also going to mean that landlords are going to have to charge more money with reducing profits. So looking forward, housing affordability is likely to improve modestly if growth in wages continues to outprice house prices as they expect. Borrowing costs are likely to moderate a little further with bank rate lowered again in the coming quarters. That should hopefully support further buyer demand, especially since household balance sheets, are already touched on, are strong, um, and indeed at its lowest for 2 decades, I should have said. So if I scroll down here, as you can see, UK house price earning ratios obviously shot up during 2022, but if you look where it is now, right in line with the 25-year average at just under 6 times house price to earning ratios. Right, on to Halifax. So average Halifax UK house price is just shy of 300 grand, a monthly change of 0.6%, quarterly change of 0.5, an annual change of 1.9%. So this is the fourth time in the last 5 months that the average house price has gone up according to Halifax, and they're edging up now to a record high. Now, what Amanda Bryden has said of head of mortgage at Halifax is that the demand from buyers has held up well coming into the autumn, despite the degree of uncertainty in the market. A number of new mortgages being approved has been at solid levels. There's no doubt that affordability remains a challenge for many. Average fixed rate mortgages are currently around 4% and like to ease down further. With property price at record levels, moving home can feel like a stretch. So finding there's kind of on the one hand, on the other hand, so whilst affordability is improving, there is still barriers getting deposit together, stamp duty, all the different moving costs. We've got a real level playing field at the moment. So it feels a bit like it's going to be a weird analogy, but a football match where it's 0-0 and you've got to break the deadlock. Someone's got to make that forward move rather than just sitting tight and trying not to concede. That's where estate agents are going to really, really earn their money in 2026 is being the ones to try and break the deadlock. So rising costs for everyday essentials are also squeezing disposable incomes, which affects how much people are willing or able to spend on a new property. So again, going back, speaking to people, can they realign their budgets to actually be the market mover, a facilitator of people buying and selling, rather than just sitting there and waiting for the phone to ring? So, whilst there's been some volatility in the market, it's proved resilient in recent months. Many buyers have opted for small deposit, longer term mortgages to help the numbers work. So yeah, 30, 35, 40-year mortgages that some are going on to improve their affordability. House prices are rising at a much slower rate than income for almost 3 years now, and Halifax expect that trend to gradually improve affordability going forward. So I think a recurring theme here from various different house price indexes is that interest rates will continue to improve, but at a very slow and steady rate. So if people out there are waiting for things to go back to pandemic times of 2% mortgages, they are mistaken. And those that have been waiting for that have seen house prices rise and they're just pricing themselves out the market. So always say it, but it's not timing the market, it's time in the market. And then another classic saying is don't wait to buy property and wait. Every time we have one of these uncertain times, which there are claims is going to affect the market significantly, what it tends to do is slow it down for a little bit. Typically, transactions suffer more so than prices. We have solid equity as a nation. I think the property market's worth £10 trillion. 80% of that is equity. So we're not in the times we were when the recession happened, when people owed 125 grand on a house that was they bought at 100, but it's now worth 80. We're just not seeing that in the market. Right, that is Halifax. So on to home.co.uk. You were pleased to know we are right at the end of this. I'm being impatient, refreshing my screen. So just a couple of bits on home.co.uk to touch on. So this bit here, there remains a veritable glut of unsold stock on the market. The total portfolio count for England and Wales is at its highest since November 2013. Oversupply is rebalancing the market in favour of buyers. The other thing I wanted to highlight was this. Right. So in the wake of a spectacular record-breaking summer, the sales market momentum is now plummeting. Notably, this greater throughput has not been sufficient to significantly reduce the unsold stock total. Typical time on market for unsold properties is trending higher and is currently 8 days more than in November last year. So unsold properties have been on the market for longer. If you want to speak to me about how you can make sure that those unsold properties go from stuck to sold and you don't lose them to another agent, get in touch with me. And if you want to find out how you can target those unsold properties and get them from other agents, feel free to get in touch. And then I can't remember off the top of my head if there was anything to discuss in here. No, I don't think there was. It was just down to here. So average time in the market is now 176 days, which is 6 months. Okay, UK house price index. So average UK house price is now 272,000. annual increase of 2.6%, down 0.6 month on month. So if I show you here, it now sits at 271,531, just shy of the 273,000 record set in August. And as you can see, still up on the 264 and a half of a year ago. And speaking of house price changes, whilst that loads on Zoopla, I'm going to go to my other screen. Okay, so Zoopla have reported 2.5 million homes have had values increase by over £100,000 in the last 5 years. So you can see here, 1 in 7 UK homes increase in value by at least 100k over the last 5 years. So I'm just going to read a little bit off my other screen. So over 2.5 million homes across the UK have risen in value by 100 grand or more since October 2020, and over 800,000 homes have jumped by 50% or more, with most homeowners achieving steady gains of just under 20%. There are 1.5 million homes that have seen their value fall by at least 100,000 in the past 5 years, according to Zoopla. So you are going to get those ones that are in the prime market or the flats which are performing less. And then if I whilst some have seen their equity go down in recent years, the majority are in a stronger position, and this higher equity will support modest house price growth and transaction levels as we head into 2026. So that is a great opportunity to send out a letter, a postcard, an email, do a video, do a sponsored ad on social media, basically saying, would you like to know what your equity gains have been in the last 5 years? The average UK house price has gone up by X. Um, would you like to know what it is in Milton Keynes? Fill in your details, and then it goes through to an instant vow tool, or you say you're going to send them a free report. That is definitely something I'd be sending out in January. So just wanted to share that at the end. So that is my November 2025 UK market update. Thank you very much for joining as always. As I've already said, if you want to find out more about the content, my LinkedIn newsletter has just gone live at the time of recording. I will be back in early January to do my 2025 market overview. If you've got any questions in the meantime, or if there's anything you want including for the reports going forward in 2026, please do give me a shout. And if you enjoy the content, I'd really appreciate it if you could hit the subscribe button and leave me a review on Google as well. Over and out from Simon and Opening the Gates. Merry Christmas and a Happy New Year.